So let's talk about due diligence in this module. These are things you need to watch out for and take into account before you invest in any business deal, and sometimes throughout the life cycle of a business or investment deal. So what are the things you need to look out for? First of all, have an understanding of the product or service you're investing in. If you don't understand it, talk to an industry expert, ask questions, Google it, watch free YouTube videos, but you must have a pretty good understanding of the product or service you're investing in. Find out the required investment amount. What exactly are you supposed to invest, and over what time period? What's the minimum investment amount and what's the maximum investment amount, so that you can then plan towards that investment. What's the tenor of the investment? Is it short term? Is it medium term? Is it long term? You need to know the tenor so that you can assess the risk profile. Obviously, longer term investment amounts, sometimes they can have higher risks depending on the country or the geographical location you're investing in. So of course, there could be policy changes, there could be regulatory changes over the course of your investment. So depending on where you're investing and the industry you're investing, the tenor may be very important. And then what is the return on investment per month? Remember I said when you're given an investment proposition, divide the overall return by the number of months you're investing for, so that you can see if you're really getting value for every month that your investment is in there. So especially if it's a longer term investment, is it really worth the wait by the time you by the time you divide the total return by the number of months you're investing in? Or could there be alternatives to that, alternative uses of that cash or that investment? Now, is there insurance? So if, for example, if it's an agriculture deal or if it's a real estate deal, is there insurance in place? Or is there a performance bond if it's a contract? Or is there a post-dated check if it's debt finance? What's the level of comfort? What kind of comfort level or assurance do you have for this investment? And if there's no insurance, is the reward commensurate to the risk you're taking? Because at this point, you're really flying blind and you're trusting the credibility of the managers to give you a return on investment. And can you afford to risk the sum that you're investing or your level of exposure? And then which regulatory agency oversees the company? So if there's a dispute, which regulatory agency can you appeal to? Or if it's a private limited liability company, what's the management structure like? Is there a board that you can appeal to in the event of a dispute? And what's the company's actual dispute resolution process? This is usually found in your contract, all the terms and conditions. Is there an arbitration clause? So instead of going to court, if there's a dispute, is there a clause for a simple arbitration, such that whatever dispute you have can be resolved quickly and in a transparent and egalitarian manner? And then Number 8, what are the specific terms and conditions? Read the fine print. Don't be lazy. Read all the documentation. If you don't understand it, ask your lawyer to read it and to flag any items they're not comfortable with. So that's one of the things that you should do. And then find out, does the company have a website? So what's the URL of the company? Are the key executives clearly shown? I'm always wary about companies that don't show the faces behind the company. What do they have to hide? Who are you really dealing with? Who is behind the company? Who is on the board? And do these people have credibility? Check them out on LinkedIn. Sometimes I even go as far as Nairaland to see what people are saying about the company or about the founders, just to get a sense of who I'm dealing with. Does the company have a physical office? Do they respond to phone calls? Can you visit? What's their customer service like? Because you also don't want to invest in a company and you're constantly chasing them for information. And then what's the actual structure? Is it a limited liability company? Is it a sole proprietorship? Is it a one-man business? Just gives you an idea of what you're dealing with, and such that if there's any dispute, how do you claim your money in the event of, say, bankruptcy or some sort of liquidation event. So find out what the structure of the company is and where you are in terms of settlement if there's ever any issue. Is there more than one signatory to the bank account? Is there key man risk? So for example, is it the kind of company that if someone is not available to sign the check, all activities, grind to a halt? So what kind of company is it? What's the level of key man risk? Is it just one man taking all the decisions, or is there a proper management structure in place? And then what are people saying about the company online? Remember I said Google the company, go on Nairaland, find out what people are saying. And then also, what is your gut saying? Ask for a meeting with the managers, visit their office, and go with your gut. And then is the company willing to sign an agreement? So if it's a debt finance agreement or a bridge financing agreement, they should be willing to sign an agreement. If they're not willing to sign an agreement, then that's already a red flag right there. And then, like I earlier alluded to, the management structure. Is it a one-man company? And then has the company filed any audited accounts since inception? This speaks to structure. It speaks to accountability. So do they actually have an accountant that reviews their books at the end of every year? Do they file with CAC at the end of every year? Do they pay their taxes? You can even ask, do they have a tax clearance certificate? So especially if you're going to be spending a lot of money on that investment, these are questions that you're well within your rights to ask. And then, does the company have sufficient savings to withstand a loss without relying on insurance alone? So for a lot of the agriculture companies, insurance doesn't come until months after. In some cases, after an assessment has been done, and then the insurance companies pay. So does the company even have a robust enough balance sheet such that, worst case scenario, if insurance doesn't come through, are you going to go away empty-handed, or are they able to plow back their profits or plow back some of their earnings to making good on some of those losses? And then, do the owners or managers have integrity? Do they have reputations to protect and a sense of shame? Because sometimes in a debt situation, some people, will just owe you for months or for years without having any sense of shame. So if you're dealing with, managers that have been involved in different scandals, one after the other, and they really don't care about their personal integrity or personal reputation, then that would be a very wrong company to invest in. And then check out their history. Have they been involved in any previous litigation, any previous corruption cases, financial scandal? Your lawyer will be able to get you that information during the due diligence process. And then, is the company or are the directors politically exposed? So especially in an industry that is heavily politicized or heavily regulated, sometimes it's just good to know if the company is politically exposed or the director. So these are some of the things that you should look out for. I have a due diligence checklist that I've put in downloadable resources. So please just go to that section, download the checklist. I think I called it a risk assessment checklist, and you can use that to run at least basic due diligence on the companies or investment propositions that you're considering. But remember, your lawyer still needs to do a deeper level of due diligence for large deals. Thank you.